Our short trade on Norwegian Cruise Line has now made more than 150% profit because Norwegian Cruise Line is now sinking after earnings as we had anticipated when we shared this video based on our analysis of the unusual option activity before earnings on April 29. So if you missed out on this video here, this is the title. You can search it on our channel, or we will put a link at the top here. If you missed it, make sure to subscribe and hit the bell icon so you don't miss out on these very profitable opportunities. How much profit did we make? Let's take a look at the put options that we had gone over. You can see here $115 of profit per trade on these put options that were just $61 each, okay, when we originally got in. So $115 of profit divided by 61 times 100 for a percentage is 188% profit now. So if you want more of these types of trades that are actually higher chance of profit than this one, then make sure to go to our website, because this trade is lower chance of profit than the ones that we actually share on our website, because this had earnings risk involved. It could have been a hedge to an underlying long bullish position, but now we know it was a short bearish position. Clearly somebody knew. So that is why we follow the data of how these wealthy investors are trading, because sometimes they have access to leaked information. So go to our website to learn more. This trade, even the fact that Norwegian Cruise Line beat earnings, right? You can see it beat earnings here, and the stock is still sinking, even though there's also a guidance that was raised positive. Everything was positive. It still sank down. And that is why we follow the data instead of the media and other analysis work, because we have found this type of analysis is a lot more accurate in predicting stock price movements. You can see that on April 26, these were the unusual options that we had detected. For the May 31st options, these 17.5 strike put options, okay, you can see they were going for about $62. We got them for $61. You can see they were building this position, 5,000 contracts on that day. Clearly we are now deep in the money now, because these put options, you can see in the money, because we are trading at $16 now. So these 17.5 strike puts, our position here, deep in the money. And there's still 10,000 open interest contracts in this trade. So we may expect to see further downside, but we are starting to take profits because we got multiple contracts on this trade. So we wanted to start covering our cost basis because it has been very profitable. And so if it does slightly come back up, then there could be some dip buyers, right? So that's what we also want to make sure we cover our cost basis, so that if it does come back up, we don't lose anything. And we can still gain, because we still have contracts in this trade here that can potentially gain even more than 188%. Okay, so that is how we trade. We make sure the risk to reward is always in our favor. And we also set up option strategies in order to do that. If you are interested in how we do it, make sure to go to our website to learn more, and watch the video before earnings to learn how we were able to anticipate this earnings drop based on our analysis of unusual option activity. Take care. Please smash the like button and have a great day.